When should we tell a client to stop writing things off to avoid red flags?
It's a good question. So the biggest issue with, just writing things off is if you have a day job and you're creating losses. So if you are creating losses, then you have the first question is always basis. So basis means, do you have enough investment into this activity in order to justify taking this loss? So that's number one. Can you demonstrate that? Number two is it reasonable? Right? There's like a sniff test. We've seen people who bring us tax returns and say, "Hey, IRS is asking questions about this thing." It says, "Okay, send us the return. Let's see what they're talking about." It's like, "Okay, I made $125,000 W-2. I've got a $50,000 loss on my Schedule C. I look at the Schedule C, which is the unincorporated business, and it's got zero revenue and it's got $50,000 of expenses." And I said, "You're stuck. You know, this is not justifiable, at least unless you have a killer story, right? Just on the face of it, it's very hard to justify that because a tax return is telling the story of what happened during the year with your income. So what that story is saying is like, hey, I have a day job, I make 125 grand, I put 50 grand into this thing, whatever that activity was, and I lost it all. I didn't make $1. I didn't make any sales. Are you actively doing anything? It's like, well, your default assumption is going to be no. Another story I like to tell is around the corner from my house, there's a shopping center with a grocery store. So that's where I go often to get groceries. In the corner of the shopping center, next to the grocery store, there's this bay, and this company opened up. And what was it was like those frozen yogurt places where you pour your own and then you weigh it, you put on whatever toppings, and you pay by the ounce or whatever it is. It was like that, but it was with flavors of popcorn. And they had these big, beautiful machines that I could see through the window because I never went in. And they had like the caramel popcorn, they had the cheddar popcorn, they had the regular, all these different things. There was like, I don't know, 8 or 10 different flavors that they had in these machines that you could then pour out and then pay whatever you wanted to pay. And so they opened, they had their big grand opening sign. I walked by, I saw it, I said, that's kind of interesting. I'm not interested, in buying any, but it's interesting. And I go home. Next week, I go to the grocery store, same thing. Next week, next week, next week. 3 months later, they're gone. So I don't know if anybody ever went into that store. I know those people invested tens of thousands of dollars in equipment and signage and building out of the shopping center suite. And for all I know, they made $0. So is that were they in business? Were all those assets in service? Absolutely. They were offering it to the public. The fact that the public didn't want it is a separate problem. But so in that case, they might have had zero revenue and had $100,000 of expenses, and they should have taken all of that on their tax return. But it's a very unusual story. So you have to think about what story are you telling on your tax return? If I make $500 and I have expenses of 50,000 or whatever, it's like, well, is that reasonable? Does that make sense that you would keep pouring money into this? Sometimes yes, right? But it's unusual, right? So you have to be able to justify, or you have to be ready to justify all these things in order to defend your story, because that's what an audit is. It's a request for explanation. It's literally the title of the form that you get sent, and they want an explanation of all these different things. And in those requests for explanations, they'll list whatever things that they're asking about. So you have to be ready and able to explain. And if you can, then great. If you can't, or if that thought keeps you up at night, then you're going too far, and you want to be more mindful of what it is that you're actually doing.
Alrighty. So don't do anything that gets you in trouble.
Yeah,
Improve it.
yeah. I mean, there's a time and a place to be as aggressive as you want to be. If you do have the justification, and it does create a question, but you have all that backup, then yeah, take it. Just know that they might question it, and if they do, it's on you to provide that explanation. I've seen it go both ways, right? So I had one client who was doing the short-term rental thing actually, and they were using their own property. They would live in it, and then they would leave for a month, rent it out on VRBO, whatever. It was a luxury kind of place, and the taxpayer was a lawyer, and she had, she's a high paid lawyer in California. She made 300 grand or whatever it was. And then they had this rental expense of $50,000 or whatever it was. And they really did. There was no exaggerations or anything. It just cost a lot of money, right? So they had to buy supplies. They spent like 30 grand on forks, it's crazy kind of things. And so the IRS questioned it. And they said, hey, explain to us this, that, and the other. And so, we talked it over and I said, okay, here's what you got to do. And you will win in the end because you are correct. However, it's going to be a giant pain. And in that case, they decided, we'll just pay the bill. And because it was worth more to them to go and do more business activity because they had another business they were starting to grow rather than spend 4 months, 6 months fighting with the IRS. And in fact, that was the correct decision because that business they went into made an extra $1 million. Whatever the tax bill was, even though they were correct, they were willing to pay it in order to just get it off their plate. So it's like, okay. Flip side, I had another client also with a short-term rental, got under examination, and they went back and forth, and it took 6 months, something like that. And then they just got a letter a couple weeks ago saying, hey, your return has been accepted as filed. Great. All the deductions they were entitled to, and everything is copacetic. It just kind of depends on how aggressive you want to be, how much hassle you're willing to put up with. I've had people who had contributed a lot of money to their church, like 20 grand, let's say. And that creates, it's not a huge audit risk, but it is a potential one. They might ask for charitable contributions and say, hey, prove to us that you contributed this $20,000. And this was an in-person appointment way back in the day. And so I'm putting stuff in. And it's like, and I get to that point where I start putting in 20,000 and the guy says, well, put in 12. I said, but you gave 20. And he says, yeah, let's just put in 12. I don't want to trip any red flags. It's like, are you sure? Because you're entitled to it. He says, yeah, I'm sure. And for him, it was worth the lack of stress in order to pay more in taxes and not have to have that worry over his head. Now, in reality, his worry should have been very, very low because everything was in the tax return was fine. But some people are much more worried than other people. So you got to balance out your personal comfort level with what it is that you're doing on the tax return. So I know it's a long-winded way of saying it depends, but that's what it comes down to. So whatever you're telling the government on the tax return has to make sense, and you have to be willing to back it up, and you have to be willing to sleep at night. Wherever those balance of factors comes out for you is where you should be.
Yep. So if you can't prove it, don't use it.
That's always true. It's almost whenever the IRS wins an audit, it's almost always documentation. It's very, very rarely are there real cases of tax fraud or things like that. It's like, can you prove that you used this money for this purpose and it had this, associated activity? A lot of people just don't keep good records. And, it's understandable. You're living life. But at the same time, that's part of your job is to be able to document all those things.
Understood. So, Neil, do we have time for one more question or how do you?
Yeah, let's do one more.
That's short.